In just 48 hours, the U.S. economy suffered a catastrophic blow. $6.4 trillion in market value wiped out, according to CNBC. That's more than the United Kingdom's annual GDP, gone. The Dow fell more than 1,800 points, while the S&P 500 posted its worst two-day percentage drop since March 2020, Bloomberg reported. And the cause? Not war, not a pandemic, not a natural disaster, but a single, politically motivated tariff announcement delivered without warning, without policy support, without a shred of foresight into the market. Mohamed El-Erian, chief economic advisor at Allianz, warned on Fox Business that shocks like this, if repeated, would damage the reputation of the United States and investor confidence. Paul Krugman, writing in the New York Times, labeled the move economic suicide, arguing that it could cause a collapse in consumer confidence and lead to job losses within months. While millions of Americans saw their 401ks and pensions shrink, President Trump continued to downplay the damage, tweeting reassuringly from a golf course in Florida. The message couldn't be clearer. Wall Street is screaming, and Washington is silent. While the U.S. economy teetered on the brink, former President Donald Trump took to the golf course, issuing a tone-deaf message, "Only the weak lose," amid rising public outrage. According to CNBC, core inflation had surged, and household purchasing power was collapsing under the weight of escalating tariffs. Rather than addressing the crisis, Trump appeared at a LIV golf event bankrolled by Saudi Arabia's Public Investment Fund, a move that, as highlighted by the Washington Post, raised ethical concerns over foreign influence and presidential priorities. His absence from serious policy response, paired with performative bravado, is now drawing bipartisan criticism. Bloomberg analysts warn that the lack of economic leadership in moments of turmoil exacerbates investor panic and household distress. The economic impact of Trump's tariff escalation is now unmistakable. Apple, Tesla, Qualcomm, and Whirlpool, cornerstones of American industry, are reeling from a 34% export tax, as reported by Reuters and CNBC. These firms, deeply tied to global supply chains, particularly in China, have seen billions wiped from their market caps within days. But the damage isn't confined to boardrooms. According to the Wall Street Journal, small businesses are experiencing input cost shocks, while consumers face record-high prices on food, vehicles, and household goods. The Bureau of Labor Statistics reported a 12-month spike in core consumer prices not seen since the early 1980s. This double blow, corporate strain and household inflation, is eroding economic confidence. In Bloomberg's recent survey, over 60% of Americans say they are cutting back on spending just to meet essential needs. The message is clear. This isn't a market correction. It's a nationwide crisis with Main Street bearing the burden. As inflation rises and wages stagnate, a growing number of Americans are unable to cover even their most basic expenses, an alarming trend confirmed by the latest Federal Reserve data, which shows a sharp increase in household financial insecurity since the new tariffs were imposed. Adding weight to public concern, Warren Buffett, one of America's most respected investors and historically a Trump ally, has publicly denounced the administration's tax rhetoric. Speaking at a shareholder meeting quoted by CNBC, Buffett stated bluntly, "Tax cuts for the wealthy won't fix a policy crisis that's hurting working-class Americans." He warned these decisions may cripple long-term economic stability. The backlash has reached the streets. Reuters reported coordinated protests in Washington, D.C. and New York, with thousands marching under banners accusing Trump of economic sabotage. This wave of unrest underscores a deepening frustration, not just with market turbulence, but with policies seen as deliberately favoring the elite while abandoning the average American. Americans are no longer staying silent, not when their jobs, savings, and future are collapsing under political chaos. On social media, the backlash is explosive. Hashtags like Trump eyes destroying America and resist Trump are dominating Twitter and Facebook. The frustration stems from economic fallout that's both widespread and deeply personal. According to Reuters, the tariffs are creating market instability that has rattled investor confidence and placed households under unsustainable pressure. Even Trump's own voter base is beginning to fracture. Business leaders and economists alike warn that this isn't just a downturn, it's a crisis engineered by short-term political ego. And as the Wall Street Journal reports, confusion over the administration's inconsistent tariff policies is eroding U.S. credibility with key trade partners, especially as allies struggle to interpret erratic White House announcements. The verdict from the public is harsh and unified. The economy is bleeding and Washington is playing roulette with American livelihoods. A wave of frustration and betrayal is sweeping across the country. People are openly comparing this moment to the darkest chapters of U.S. economic history and asking a hard question. Can Trump truly be trusted to fix the economy he helped break? With the economy in free fall and millions of Americans struggling, skepticism over Trump's economic leadership is reaching critical mass. His tariff policies, initially pitched as a strategic maneuver against China, have morphed into a broad-based assault on global supply chains. As Bloomberg notes, these tariffs have not only failed to bring back U.S. manufacturing, they've driven up costs across the board, hurting both producers and consumers. And according to the Financial Times, the administration's erratic trade strategies have undermined investor confidence and destabilized America's global trade reputation, particularly with smaller nations caught in the economic crossfire, some of which Trump bizarrely referenced in recent statements. The bottom line, Trump's economic playbook is being questioned not just by critics, but by history itself. They've made life more expensive for every American family. And now voters are starting to wonder, can he even change course? Does he have what it takes to fix this before it's too late? The sense of urgency is intensifying. In just one trading day, over 700 points vanished from the Dow Jones, sending shockwaves through Wall Street and Main Street alike. According to CNBC on March 5, 2024, the Dow Jones Index lost 713 points due to negative reactions from investors about the Trump administration's lack of direction in tax and trade policies. Bloomberg also warned that the lack of policy stability from the White House is becoming a systemic risk for the market. The administration appears increasingly unprepared. No concrete plans, no cohesive messaging, just chaos. For millions of Americans, the damage is no longer theoretical. It's at the grocery store. It's in their utility bills. It's in the sinking value of their retirement accounts. And now, the fear is no longer if there will be a recession, but when and how severe. The press conference intended to reassure the American public turned into a disaster broadcast before a global audience. The market earthquake on March 14th, newly released financial reports revealed troubling signs. Inflation remained high, consumer confidence had dropped, and all major indicators were in free fall. The Dow Jones fell over 720 points, the S&P lost more than 113, and the Nasdaq plunged nearly 500 points, the steepest decline in months. Instead of instilling confidence, the press conference became a symbol of dysfunction. Trump's off-topic remarks and absence of a concrete recovery plan only deepened public anxiety. The timing could not have been worse. March 14th, the day those reports were released, marked a turning point. According to Bloomberg and Reuters on March 14, 2024, the latest report from the U.S. Bureau of Economic Analysis, BEA, showed that consumer confidence fell by 11%, while core inflation remained at 5.7%. Trump's press conference that day was considered a media disaster by many news agencies, causing the market to immediately react negatively. Wall Street didn't just react to numbers, it reacted to leadership. When a president dodges hard truths in favor of political distractions, investors lose confidence. That day, nearly $1.5 trillion in market value was wiped out in a matter of hours. This wasn't just a bad day for the market. It was a referendum on the White House's credibility, and it failed. About the administration's response to economic instability, White House Press Secretary Caroline Leavitt began with familiar rhetoric. And shame on you and shame on the mainstream media for trying to cover for these individuals. This is a vicious gang. But then a reporter asked a surprising question. Would the president use something to potentially run for a third term? As he said, there are amendments there. Look, you guys continue to ask the president this question about a third term, and then he answers honestly and candidly. Instead of addressing surging inflation, falling markets, and economic anxiety, Press Secretary Caroline Leavitt doubled down on deflection, blaming the press and attacking critics. But the real shock came not from her rhetoric, but from the president's own ongoing flirtation with a third term, a move many view as constitutionally dangerous and politically destabilizing. According to Reuters on March 15, 2024, the White House press conference turned into a media crisis when Caroline Leavitt, press secretary, avoided all questions related to economic policy, instead attacking the media. When asked whether President Trump intended to run for a third term, she did not deny it, even hinting that the possibility could happen due to the amendments allowed. According to analysis from the Financial Times, Trump's continued hints about a third term in the context of economic instability could undermine confidence in American democratic institutions, while making financial markets more unstable due to concerns that policy will continue to be personalized and lack direction. This pivot from economic accountability to authoritarian undertones is alarming. The White House appears more invested in managing optics than managing inflation, and the American public is noticing. The president's casual deflection, delivered with a smile, may seem benign, but in the context of rising authoritarian rhetoric, it landed like a political grenade. Rather than clearly rejecting the idea of a third term, something explicitly forbidden by the 22nd Amendment, he left the door open with ambiguous language. This moment has become symbolic of a broader crisis, the erosion of democratic norms under the guise of populist approval. In a time of economic freefall and institutional strain, the lack of a firm constitutional affirmation is not only inappropriate, it is incendiary. According to CNN Politics Analysis, March 16, 2024, on the flight the night before the press conference, Mr. Trump was asked about the possibility of running for a third term. In denial, he simply replied that it's not really something we're thinking about. Jeffrey Toobin, a constitutional law expert, commented on CNN. Such evasion, especially in a context of economic and social instability, is a test of the limits of power that the Constitution does not allow. It is noteworthy that in the clear speech, no one in the White House explicitly stated that he would not run for a third term. This creates a dangerous currency when ambiguity is used as a tool to test public opinion, eroding each layer of possible regime boundaries. In a stunning moment of institutional ambiguity, the White House left the door ajar on the possibility of a third term, a move that sent political shockwaves across the country. This wasn't just a constitutional misstep. It was a warning flare. When those in power begin to downplay the legal limits of office, democracy itself becomes negotiable. What made this worse was the silence that followed. Instead of clarifying their stance, the administration dodged the press, creating an information vacuum that fueled more speculation. According to Reuters on March 16, 2024, the press conference not only failed to reassure the public, but also ignited a crisis of confidence. Journalist Steve Holland wrote, "The failure to explicitly reject the possibility of a third term is a dangerous step backward in the administration's messaging." CNN also quoted political historian Douglas Brinkley, warning, "The last time we saw an American president avoid the 22nd Amendment was..." Never. The question was no longer inflation, but is America slipping away from a constitutional republic? As the press continued to question, the atmosphere in the meeting became as tense as a string, a government on the line between accountability and authoritarianism. At the very moment when transparency was most needed, the White House sidestepped direct accountability again. Instead of addressing how a senior journalist's private contact information was leaked into a government-linked group chat, officials recited vague affirmations of unity and success. But the American public wasn't buying it. The stakes are national security, not just PR. If a journalist like Jeffrey Goldberg, editor-in-chief of The Atlantic, can be exposed this way, what does that say about the safety of whistleblowers or intelligence assets? According to CNN, on March 17, 2024, the leak of Goldberg's personal phone number occurred in the context of a series of press figures and former intelligence officials reflecting on the situation of personal information being used as a tool of intimidation. Goldberg's spokesman confirmed that he did not authorize or share information with any government group. Rather than release the results of the investigation, the White House dodged and praised the effectiveness of its security team while public confidence continued to collapse, wrote the Washington Post. This was not just a failure, but a manifestation of a system of power that was out of control and concealing serious risks. This wasn't just a bureaucratic delay. It was a calculated distraction. The refusal to engage with the core issue only deepened the impression of a White House in defensive retreat, weaponizing unity to dodge accountability. Instead of taking decisive action to mitigate the economic downturn, the White House opted for hollow posturing. In a critical moment when markets were reeling from massive losses, investors anticipated bold measures, such as targeted interest rate reductions, fiscal relief for small businesses, and even temporary tax suspensions, to stabilize confidence and spur recovery. Instead, the administration offered only ambiguous rhetoric and ceremonial gestures that lacked substantive policy commitments. This failure to act decisively has serious implications. Without concrete steps, economic instability will likely worsen, leaving American families and businesses exposed to further losses. The absence of measurable actions has not only undermined market confidence, but also raised questions about the capability of the current leadership to steer the economy out of crisis. According to Reuters, March 16, 2024, in the recent press conference, there was no specific policy information mentioned, only general promises and symbolic events. The Financial Times also noted that the ambiguity in the White House's message is creating a serious gap in market confidence, leaving investors and businesses worried about the future of the economy. The mention of Mark Carney, although he is not the actual Canadian Prime Minister, this is a shocking detail in the original transcript, further adds to the confusion and doubts about the Trump administration's leadership vision. This hollow approach could have far-reaching consequences, potentially exacerbating the recession and eroding the trust that is the foundation not only of financial markets, but also the broader foundation of U.S. governance. In a move that shocked political analysts worldwide, Canadian Prime Minister Mark Carney chose Europe over the United States for his first official visit, bypassing Washington entirely. This wasn't just a symbolic gesture, it was a strategic message. Canada no longer sees the U.S. as a stable or dependable partner. The decision comes amid mounting economic instability in the U.S., with markets crashing, inflation surging, and political uncertainty reaching new heights. Instead of meeting with President Trump, Carney traveled to Paris to confer with French President Emmanuel Macron. The goal? Rebuild global alliances, without waiting for Washington to lead. According to Bloomberg, March 16th, Carney rejected an informal invitation from Washington and prioritized restoring the European Union. The Financial Times called the decision a diplomatic slap in the face to the White House amid a global crisis of confidence. CNN International wrote, Canada is sending a message. It no longer trusts the current White House to lead. The point couldn't be clearer. America's closest allies are now hedging their bets, and Trump's erratic policies are isolating the United States on the world stage. British Prime Minister Keir Starmer's joint appearance with Canadian PM Mark Carney signals something seismic. Canada is no longer playing second fiddle to U.S. foreign policy. Carney's message was crystal clear. Canada is shifting away from single-nation dependence, especially on the United States, and is now building a diversified global alliance focused on both economic resilience and national security. The announcement wasn't just diplomatic theater. Carney unveiled plans to bolster domestic infrastructure, scale up green investment, and transform Canada into a self-reliant economic engine, positioning it as a future energy superpower. According to Reuters, March 17th, Carney said, "We no longer look to Washington to lead. Canada will lead by action, not by dependence." Bloomberg commented, "Canada is reshaping its global role, focusing on energy security and non-U.S. international alliances." The Wall Street Journal pointed out that Trump's policies have forced many allied countries to seek a more independent path. The implications are profound. A founding NATO member and U.S. neighbor is now repositioning itself away from Washington's shadow, a move that could signal a broader Western realignment if instability in the U.S. continues. Canada is no longer staying quiet. Prime Minister Mark Carney just sent a seismic message to Washington. Canada will not tolerate America's self-serving trade policies indefinitely. He stated plainly, U.S. tariffs and trade wars don't just damage allies, they backfire at home. We've seen this play out. America's own economy has stumbled because of short-sighted trade aggression, Carney warned, and he's not wrong. According to CNBC, the Trump-era tariffs on steel and aluminum cost U.S. consumers $900,000 per job saved, while Bloomberg Economics noted that retaliatory tariffs slashed American agricultural exports by billions. CNBC. Trump's tariffs cost U.S. consumers dearly. Bloomberg. Trump's trade war backfired on farmers. But Canada isn't just defending, it's repositioning. Carney made it clear that the country is actively diversifying trade, building stronger ties with Europe and Asia, and strengthening its national defense. This isn't just a policy pivot, it's a rebuke. While the U.S. doubles down on isolationist economics, Canada is choosing resilience, multilateralism, and long-term strategy. The message is unmistakable. America's economic missteps are no longer just domestic. They're driving allies away. Canada just drew a red line. Prime Minister Mark Carney has declared, if Washington continues weaponizing trade, Ottawa will build new alliances, with or without the U.S. This isn't theoretical. Canada is already exploring European defense suppliers like Sweden's Saab, signaling a dramatic shift from decades of North American military collaboration. As Reuters reported, Sweden is gaining traction as a reliable alternative to U.S. arms providers, especially in nations wary of political conditions attached to U.S. contracts. Reuters, Sweden's defense firms gaining ground as global trust in U.S. suppliers slips. Beyond defense, Carney outlined a larger agenda, expanding trade with Europe, leveraging EU innovation in green tech, and fostering mutual investment in clean energy sectors. This is more than diversification. It's economic insulation, a strategy to protect Canada from Washington's unpredictability and secure future growth. Bloomberg analysts call it a wake-up call for Washington, warning that U.S. overreach in trade policy is alienating even its closest allies. Bloomberg. U.S. trade policy risks long-term damage to strategic alliances. Canada isn't retreating. It's recalibrating towards sovereignty, self-reliance, and strategic independence. Canada isn't just shifting trade policy, it's rewriting the rules of national defense. By aligning with European partners like Sweden, Canada is moving away from a U.S.-centric security model. This isn't about buying weapons. It's about building a multilateral defense architecture. According to CNN Business, this pivot stems from growing concerns over U.S. policy volatility and unilateralism in both defense and trade. CNN Business. Allies reassess U.S. security commitments amid rising unpredictability. While Canada pursues cooperation, the United States doubled down on chaos. At a national event dubbed Tariff Liberation Day, Donald Trump raised his fist and proclaimed a new era of economic aggression. This declaration sent shockwaves through global markets. The Dow and Nasdaq immediately slid on fears of retaliatory tariffs, supply chain disruptions, and diplomatic fallout. The Wall Street Journal reported that multiple trade partners, including the EU and South Korea, are preparing retaliatory measures, while businesses brace for another inflation spike. Wall Street Journal. Global response to U.S. tariff escalation could reignite trade war fears. Canada's pivot is not just strategic, it's survival. While Trump celebrates economic nationalism, Ottawa is quietly building the alliances of the future. It's not a trade strategy, it's economic roulette. Trump's new tariff wave is indiscriminate. Canada, Japan, the EU, even the UK, no one is safe. Yet shockingly, there's still no official list of affected goods or final rates. Even Peter Doocy of Fox News, a traditionally pro-Trump voice, admitted on air that there's still time for him to change his mind. But sources say he's locked in on two vague options. Fox News. White House mulls, final tariff details, confusion remains. Meanwhile, America's heartland is on high alert. The farm and manufacturing sectors are sending out urgent warnings. We may not survive another season under these conditions. Popcorn exporters are losing market share in Europe. Yes, popcorn. Even American snacks are now victims of economic fallout. According to CNBC, U.S. meat processors have reported early signs of European contract cancellations due to anticipated retaliation tariffs. CNBC. U.S. meat and grain exports face backlash in Europe over Trump's tariff threats. This is no longer about trade balance. This is about strategic instability. Longtime Trump supporters in key export sectors are starting to ask, how much more collateral damage can we afford? Allies and critics alike are sounding the alarm. Senator Tom Tillis and other lawmakers are warning that the U.S. is inflicting real pain on its domestic sectors. Farmers, for instance, are teetering on the brink of bankruptcy. With just one failed crop pushed them over the edge, and the industry is already reeling from the effects of punitive tariffs. The situation has escalated to a point where even established media like the Wall Street Journal have issued harsh editorials condemning mass tariffs as counterproductive. As reported by Bloomberg, there is simply no historical evidence that blanket tariffs have spurred growth in major economies. According to the WSJ, March 15, 2024, in-depth articles have asserted that there is no evidence that large-scale tariffs have ever helped the economy thrive, while Bloomberg warned that Trump's 25% tariffs could shift the advantage of the global auto industry to China. Meanwhile, while Trump continues to blare America First slogans from the political stage, global market signals tell a very different story. In Shanghai, the leading EV CEOs are gearing up for a future where U.S. tariffs have already altered the competitive landscape, potentially ceding technological leadership and market share to foreign rivals. This is not mere political rhetoric. It is an unmistakable signal that Trump's tariff policies are undermining U.S. domestic industries at a time when strategic economic stability is paramount. Donald Trump's so-called Liberation Day is rapidly becoming a symbol of economic self-destruction. By slapping tariffs on steel, auto parts, and other essential inputs, he hasn't liberated the economy. He's shackled it. According to CNBC, these tariffs have pushed American production costs to record highs, forcing manufacturers to pass costs to consumers, or worse, shut down entirely. Wisconsin's rejection, symbolized by falling regional manufacturing indexes, isn't just political, it's economic revolt. According to CNBC, March 18, 2024, input costs for the U.S. manufacturing industry have increased by nearly 22% after import tariffs, especially on steel and auto parts. The Wisconsin Industrial Index, released by the Federal Reserve Bank of Chicago, has fallen for 3 consecutive quarters. What Trump framed as a bold act of national pride is being called, by economists and even conservative think tanks, a unilateral economic assault on America's own supply chain. The Wall Street Journal warned that the U.S. is declaring war on its allies and betting against its own economy. And Canada? Once a close partner, now squarely in Trump's crosshairs. Ottawa responded sharply, with Finance Minister Chrystia Freeland stating that Canada will not be bullied into trade submission. According to Reuters, March 17, 2024, Canada announced that it would retaliate in kind if the U.S. imposed new tariffs, especially in the energy and manufacturing industries. The question is no longer whether tariffs will cause pain. The question now is, how deep will the damage go before America wakes up?